Okay, so here we completely finish our general journal page number 1. So now we're going to be moving on to the general journal page 2. Now let's take a look at here what happened here. So we got telephone services is connected, okay? Installation fees are going to be included within the first month of the bill. So in this case, right, is there a transaction that we need to record? No, because here the telephone line is connected. However, there's information here that says that installation fees, and usually when you turn on a telephone line, they have installation fees, line fees, all that stuff. That's not going to show up until you receive your very first bill. So in this case, nothing here. Okay. So then on Thursday, okay, still on Thursday, natural gas is connected and $100 deposit is required, payable to NV Utilities. So in this case, we need to turn on the gas too, and they required another deposit for the gas to be connected. Okay, because gas is very, very important, especially when you're in a business, because that pretty much runs, your, if you have a kitchen, that's going to be running the kitchen. Second of all, it's going to be running the heater system, okay, or a furnace, a thermostat, whatever means that you need the natural gas for. So in this case, we are required to have a deposit, okay, for another $100. So what do we need to, are we going to do this? So we just did, it's going to be the exact same journal, except the only difference is it's for natural gas.
Yeah, and the check number.
And the check number is going to be different, yes. So I'm going to copy this from the previous one because it's going to be identical. Okay. To save some time here. Oops. Not that line. We need the line under. Okay. And this is, once again, we're still on June 6th. Okay. And now we need to go ahead and write a check. So, back again to your check register. The same date here. Okay. And we're making our $100 deposit to the same place, NV Utilities, right? Now, in this case, right, if you have a notes section, then put this one is a different one, because this one's for gas instead of electricity, okay? But now that I have my check number for 1505, go back to my general journal, and this time I'm going to be putting in here that we wrote a check out to NV Utilities. Okay. And this is for natural gas deposit. And we wrote check number 1505. Okay. So here, we're just recording another deposit, but this time it's to the same place, but with this one is to turn on the gas. So I'm going to go ahead and put this in my ledger, because I've updated, I have another deposit that I just created, right? So I'm going to go, this one, I'm still going to do the same thing as what I did earlier. Go to your deposits first and then update your checking last, right? Exactly the order that you see it here. So here I'm under deposits. Okay, And this time, natural gas deposit. Okay. This time, general journal number 2. Okay. Because we're finally reached our second page. And once again, it's for $100, which then, if I've dragged my formula down, it should automatically recalculate to me to say that I have now $1,700 in my deposits. Okay. Then last but not least, I need to go all the way up to the top of my checking account because now I wrote out another check for $100. So I'm decreasing my account once again by $100. Okay. And here, all I need to do is write my check number 1505 because I can pull the information immediately. And this time, this transaction is on general journal number 2. So that's the difference. So here, I'd be able to recognize the difference between the first transaction of my $100 deposit versus my second one because the second one is on the second page, all right? And it tells me here, if I look it up, my transaction, it tells me that I've written a check for the natural gas deposit, okay? So $100 goes here, and now my bank account is going to reflect $11,361.29 because I took out another $100. Okay. So after that we've done that, we still need to go back to our subsidiary ledger because we do need to record that this transaction has happened and that we need to make sure that this is for the natural gas. Okay. I paid it using my check number 1505. So once again, instead of this one is general journal number 2. Okay. And once again, I'm going to fill in the information exactly how I have it, right? The invoice, that amount that I had to pay was $100. And I made that payment with a check for the 1502. So if I ever shut down my business, they should be giving me back both deposit for the electricity and the natural gas. Okay. And right here, because I pulled down my formula, it has showed me that I don't owe NV Utilities anything. And they don't owe me anything. Okay. Right? Everyone good?
Yeah.
Yes.
Okay. So then now that I finished this transaction here, let's see what happened next. So here, I made another purchase order to Hallie Bros, okay? And let's see what I bought. I bought a commercial coffee brewer and a commercial coffee grinder. All right, the information's right there. But because this is a new vendor and they require a third deposit down payment. So in this case, they require me to pay $11.40 down payment. Okay, so in this case, this down payment is going to go against my invoice, right? Because, so this is going to be a prepaid account because this one's actually going to go against my invoice. All right? Or my bill, excuse me. So this one's going to be a payment towards my actual overall bill. Now in this case, so because I have to write a check out to them for the third of a down payment, this is what we're going to record. We're going to record it as a prepaid account because, once again, this amount is going to go against my actual bill when I actually receive it. So let's do the first things first is record that I have a purchase order, and then we'll go ahead and proceed with the down payment after. Okay. So first thing I'm going to do is go to my POs. Okay, this is PO 303. Okay. This time, I think we still are on the 6th, Thursday, June 6th. Okay, so we're still on June 6th. So it was ordered on the 6th of June. Okay, and this time I am purchasing this from Hallie Bros. Okay. And what am I buying from them? I'm just
a brewer and a grinder.
Correct. I'm just buying a brewer and a grinder. Okay. And what's my estimated amount in grand total?
$35.15.95.
$35.15.95. Good. All right. So now that my purchase order is filled out, now all my pending is just the bill and etc. Right, and the items. Right. So now that I have my purchase order filled out, I'm gonna go ahead and go to my check register because I need to write them a check. So I'm gonna use check number 1506, and again the date is June 6th. And this time I'm going to write the amount for the $11.40 because that's the down payment that they are requiring me to pay. And again, the person that I'm writing this check out to is Hallie Bros. So now that I've written my check out for 1506, I can now go ahead and go to my journal and complete the whole transaction. All right. So this is 6/6. We are making a prepayment because we're paying in advance for a fixed asset. This is our down payment. Okay. Prepaid accounts. Okay. Right, we've used that account before, so I can just go scroll up and I find that prepaid accounts is account number 18600. Okay. And then, of course, I wrote a check. So I'm going to be decreasing my checking, right, by $11.40.22. Okay, $11.40.22. Okay. So then now I can go ahead and write in my little description here. So first things first is the vendor, right? Who did you write this check out to, or who did you do business with? In this case, Hallie Bros. Okay. Now this down payment is going to go towards my purchase order number 17303 because I haven't received a bill from them yet. So I don't even know what invoice I'm applying this to. Instead, I'm going to say this is directly correlated to my purchase order 17303 because that tells me that I ordered a brewer and a coffee grinder. All right. And last but not least, I'm going to make a note that this was 1/3 payment, 1/3 down payment. And last but not least, How did I pay for that? I paid with using check number 1506. Right? That's all I have to do. Right? Because the purchase order pretty much tells me what I ordered. Okay? The check number tells me who I ordered, how much I ordered, and etc., etc. And there you go. Now I've completed my journal. Okay? So now the last thing that I need to do is go and update my general ledger. Okay? So this time, I'm still using checking, but I'm gonna continue using it the same way I've been doing it, right? I'm gonna go to prepaid accounts first and then update my checking last. Okay, so prepaid accounts is right here down below, should be very close to the very bottom of the page. And here, prepaid accounts, I'm gonna go ahead and indicate the date. And this time, I'm going to go ahead and say that this is a 1/3 down payment, okay? And this is correlated directly to PO number 170303, which tells me what bill or what item it's actually related to or correlated to. And lastly, I'm going to say that I wrote check number 1506. Okay. So general journal number 2. Okay. And this time I debited my account for the $11.40 and 22 cents. Right? Which then has recalculated for me to give me a grand total of $7,794.39. Okay? So once again, having that formula just only makes it a little more accurate, but also a lot more quicker to calculate.
I love Excel.
Yes, and that's why, especially for this, then this is the manual accounting. So Nathan, you got to see what it looks like to just use QuickBooks earlier on. Now, yes, this is longer and tedious, but this is the accounting behind the scenes. This is what QuickBooks is doing behind the scenes. Okay? It's doing exactly this right here, that every time I enter in a purchase order, I make a payment to something. That's what it's doing behind the scenes. Right? So, yes, so the great thing about Excel is it makes doing calculations a lot more easier. Okay, so there we have it. Update for me. Now, the only issue here is that it will not produce you accurate answers because of human error. So if I typed in 11.40 and 20 cents, then that's where I know that it's calculated wrong because I typed it in wrong. Not because Excel produced it wrong. The formula is correct. It's because I typed it in wrong. All right, so that's why you have to be very careful in typing, because oftentimes that is a lot of human mistakes, is they just fat finger a lot of these numbers in there. Okay, so there we have it. There's my check right there, and it updated to my account for $7,794.39. So then, back at the top, because we are now need to go back and take that money out from our checking account. So 66, right? All you need is just the check number 1506. And last but not least, general journal 2. Last but not least, I wrote it out for $11.40 and 22 cents. So therefore, I press my enter key to validate that this is what I want in this cell. And now Excel has recalculated, telling me that I now only have $10,000, 221.07 cents in my bank account. Okay? And I'm going to go ahead and pull and extend that formula a little longer so we could continue doing our calculations. Okay? So there we are, 1022.07. Okay? Now that we dealt with, once again, another vendor, we need to update our subsidiary ledger. And this time it's to Hallie Bros. Okay. So, again, it's a vendor because they're providing service to us. Or in this case, they're selling a product to us. So here you go, Hallie Bros. There we have it. Okay. And here the date is 6/6. Now this is where you have to pay really close attention to, because once again, this is how I use Excel to fill out this worksheet. And as we progress and keep dealing with Hallie Bros, then you're going to see how this transaction will progress. So in this case, I need to make a note that this was a 1/3 down payment, okay, for coffee brewer and grinder. And this was, we used check number 1506. Okay, so again, the invoice here. Now, since I didn't receive an invoice, but they did require me to make a down payment, this is where I'm going to go ahead and indicate that this is for the purchase order 303. Okay, because then that's going to tell me that that's what this check is related to, is this very purchase order itself. Okay. We haven't received the bill yet, so we don't know if we are given any terms or anything like that. So I can skip this part, right? Now this is where you have to be careful, and this is where I'm going to show you how to use this table the way that I'm going to teach it to you. In this case, I did make a prepayment. However, because this is a purchase order, the invoice that I'm going to place here is going to be for the $11.40 and 22 cents, because that's what they told me that I had to pay. All right. Now, why am I not putting it into the prepaid accounts? Because I made a payment. Right? And this is where we saw that idea where if I just only have the payment, then it looks like they owe me something. And that's not the case. In this case, I want you to do it exactly like this, because when we receive the bill, you'll know, I'll show you exactly how we compute the bill. Okay? In this case, that's exactly what I want. I want my invoice good to be here for the $11.40 and 22 cents. And once again, I made a payment for the $11.40 and 22 cents. Okay? So now I'm going to punch in my formula once again, saying that it's my invoice amount minus any prepaid accounts, minus any returns and allowances, minus any discounts, and minus any payments. So therefore, right now, I owe Hallie Bros nothing, right? And even if I just only make that payment, then it's telling me that Hallie Bros owes me $11.40 and 40 and 22 cents. But in this case, they don't owe me that money, because that money is going to go towards my bill. So in this case, like I've mentioned before, it will make more sense as we gradually gradually look at Hallie Bros and the processing the rest of his the bill. Okay, so in this case, yes.
What was the okay? The payment. I mean, I just want to do the formula. So okay.
So it's going to be your invoice amount, so equal invoice minus your prepaid, minus any returns and allowances, minus the discount, minus the payment. And right now, you owe nothing. And this is where you could go ahead and drag down your formula, because we will be looking at Hallie Bros quite often, okay? So there you go. And right here, once again, this cell right here basically is a sum of all of the bills that I will be collecting from Haley Bros. So Haley Bros, I could just purchase one item from them. I could purchase as many items from them. And this gives me just a total of all of the invoices. So then that gives me a grand total of what I owe. Right now, I owe nothing because the invoice, I never received the invoice, but the payment I made constitutes that I don't owe Haley anything. In fact, they don't owe me anything either because they're going to take that money and apply it to the invoice for my coffee brewer and coffee grinder. So they don't owe me anything either. Okay? All they owe me is a coffee grinder and a coffee brewer. Okay? So that is that right there. Okay? Back to our scenario. Okay, so then let's see what happened here. We purchased from restaurant supplies, okay? And in this case, we have it on an account that you financed, it for 12 months with 0 APR, and the payments are going to be effective after the 12 months. There will be interest that will be up to 18%. So in this case, we financed this item right here, which, what did we buy? What did we buy from restaurant supplies?
A cash register?
We bought a cash register because we will be running our store. So we definitely need a cash register to safeguard our money so we can, exchange it with our customers. So in this case, on June 6th, I purchased a cash register. Now, once again, a cash register is going to be a fixed asset. Now, what are the costs that are going to be included?
I'm sorry, what did you say? What are the costs that are going to be included
Mm-hmm.
in purchasing the cash register?
Mm-hmm.
Is it shipping and handling?
In this case, we don't have any shipping and handling because we actually went to the physical store and picked it up.
Okay. Tax?
Tax is included.
And the total due. That's it, right?
Correct.
Okay.
So in this case, how much is my cash register right now when it walked out the door?
$649.49.
$649.49. Not what it originally cost me for $5.99, because in this case, I have to include sales tax. And if I ordered this online and I had it shipped to my store, I would have to pay whatever additional fees, because the idea is to get the asset to the store and ready for service. Now in this case, a cash register is already ready to be plugged in. You just need to plug into the wall and it's going to be ready to go. There's nothing you need to set up for it, nothing you need to do to the cash register. So in this case, it's already ready for service. As soon as you purchase it, you plug it into the wall, boom, okay? So in this case, how am I going to journalize this? Do I have a cash register account?
I'm sure we should, right?
Yes, go ahead and take a look at your chart of accounts. Okay.
Would it be 10,300? No, that's cash in register.
Mm-hmm.
No,
That's not it. No, that's not it.
14,050.
14, yes, 14,050, right? Because this is a fixed asset, right? So in this case, this must be under my, in this case, I put it under office equipment, all right? So that means I'm going to go ahead and plug that in here, cash register, right? There's a difference between cash and cash in the register because, once again, we need to set up to have cash in the register. which we won't do until later on. So that's going to be considered cash. That's our money. So we need to make sure that you correctly recognize the account number. In this case, I'm talking about the fixed asset. And this is going to be $14.50. Okay? And how much did I pay? How much is it? $649.49, right? Okay. Now I have a question for you. How did I pay for it?
It's on account, so account payable.
Good. It's on an account. It's on an account. So therefore, I have an account with restaurant supplies. Now, here's the difference between an accounts payable, right? When you have an accounts payable, okay, you usually are going to be owing them within a year, right? Or you're going to be paying them within a year. Now, in this case, I financed this cash register, right? I financed it for 12 months. However, can I go beyond the 12 months? It says you can, because at the end of the day, after the 12th month is over, you're going to be hit with interest. So in this case, this is an agreement that I owe this company money. However, I can choose to I could choose to pay it off all in 1 year, or I could choose to extend it for longer than a year. What do we call that? Do you guys remember for that? That one's from way back when in chapter 2.
What do you call it?
What do you call an account that you promise to pay somebody, but you can negotiate, you could defer the payment, you can extend the payment? What do you call that? When you, especially when you finance an item.
I want to say assumption, but I don't think that's it. When you assume, no, that's assuming the amount. What the chapter 2?
So, the biggest hint is if I'm owing somebody money. What's your automatic assumption? What kind of account type is this?
That's account payable, right?
Okay, so you said it's account payable, but the debt. But I just told you the account's payable, right? You owe somebody, you must pay it back, and you set the degree of terms as is, right? Whether it's 60, 30, or 90 days, right? You're obligated to pay them back within a year. But in this case, in this condition, right, I'm financing this payment. And I get to choose if I want to pay within the year, or I can choose to defer my payment and pay later or beyond, or I could extend my payment.
And then just pay like a lump sum by the end of the year. Just pay it off.
You could choose to do that, but in this case, if I'm financing it, that means I either make monthly payments on it, or
would you be paying interest?
In this case, it's right here. It says, note that the interest will not be effective until after the 12-month period.
Okay. And it's subject to 18%.
Okay. It's not a loan because that's more than a year. It's not accounts payable because that's within a year. What's that one account that we talked about that allows you to be able to defer payments, and especially it's used primarily for financing? Okay, I'll just go ahead and give you the hint. What was that?
Is that a purchase discount?
Not a purchase discount. That's only for if that's only based on inventory. And I mean, you could get a purchase discount on an asset, but again, if you're buying an asset, you just take it directly off the asset itself. Okay. All right. The biggest hint here is going to be, let's take a look at my chart of accounts. What accounts do I have? Okay, since we know it's a liability because you owing this person money, right? But what account would make best fit for this scenario?
Okay, prepaid account. A type of account is an asset. The category is O, other income, and it's a debit.
We're not.
But this not a prepaid account.
No, it's not. Mm-mm.
Accounts payable, a liability, um, current.
Take a look at
And
your chart of accounts.
I'm looking. That's what I'm looking at.
You're not looking at your chart of accounts. You're looking at
The
something
one
else.
for the Coffee Cafe one.
Yes.
Chart. Okay, I see it. I have it.
Are you asking the discount that we're gonna get at the end of the year?
The five,
In this case, there is no discount because we purchased it from the store.
and it's not any terms.
There isn't any terms. Okay. All right.
From the chart of an account, from the account paper, right?
Okay. We talked about it's not an accounts payable. Okay. So we talked about this one account called notes payable, right?
In chapter 2, notes payable.
We went over it in the exercises. So again, a notes payable allows you, and this is for financing purposes, right? It allows you
Should have said something.
to
I'm in
to
school. Bug off.
it allows you to make a payment to a company, right? Or to a vendor, right? And this notes payable allows you to extend, defer, or if you have an agreement that, hey, I'm going to make monthly payments to you, and this is what my agreement terms is. So then when you receive a bill, right, oftentimes when you finance an item, you have a minimum payment. And that's where you can choose, am I going to choose to pay the minimum payment, or can I choose more to pay more over the minimum payment? And that's exactly what this is right here, is a notes payable, right? Because the fine line is, I'm going to finance it for 12 months. However, am I obligated to pay the whole thing in 1 year?
Not really.
No, because I get a grace period that the first 12 months I get 0 APR. That means I don't even need to pay right now. I have a 12-month period where I'm not going to get charged interest. But if I make payments after the 12 months, that's where I start collecting interest.
I see notes receivable or like IOUs.
That's notes receivable, but I'm talking about how we owe people.
You said the term from chapter 2 was that we're looking for was a I don't see it here in chapter 2.
It's a notes payable.
It's a notes payable.
I don't see notes payable. Okay. All right. But that's the term you were looking for.
Correct. Because in this case, I can choose when to pay. Right? I could choose, in this case, they gave me 12-month grace period where they're not going to charge me interest, and I don't have to pay until a year later. Okay? But if I pay a year later, they're going to hit me with 18% interest. So if I pay now, right, and I financed it for 12 months, then I can easily pay this amount off without getting hit with interest. And that's what you want to do, because you never want to have to pay money into interest, because you're not paying for the asset for $649. You're paying this plus 18% interest. And that's not that, you shouldn't have to pay more than what you want for something that you need. So in this case, I'm going to use a notes payable. All right?
Okay.
So this is account number 23,000. Okay? Because it's still going to be that I owe them on an account. That's correct. And this one, I'm going to make monthly payments to restaurant supplies. Okay. So there you go. I put notes payable, which is account number 23,000. All right. And I'm going to place this as $649.49. So I got to clear that little dot out. So yeah, 649.49. All right. And I have all the information I need. So again, this is restaurant supplies. My account number is 569812. Okay. You could choose that. You could say 12-month finance. Okay. And that's it, because you didn't write a check to this. You didn't do anything more than just place this on an account. All right. And that is it for my journal. All right. So now.
Okay, so notes payable is when you're making when it's due and you're just making payments.
The idea here is when you finance an item.
Okay.
When you finance, when you break an amount down and you're breaking it into either monthly payments, or you're breaking it down into smaller portions to pay it off. You're financing it.
Finance a payment. Okay.
Mm-hmm. And when you finance a payment, right, you get to choose when you want to pay and when, well, obviously you can't choose not to pay. But in this case, you have a time frame, right? You get to have the first year to not pay it, and you get 0 interest charged. But if you pay after 12 months, you're going to be hit with interest. All right? So that's very typical of many loans, many credit cards, many things that you do finance. So a lot of times you go to Best Buy and say, I want to finance this laptop or finance this washing machine. Okay, great. We'll give you 18 months of finance at 0 APR, but after 18 months, you're going to be charged with this much interest. So that means we're giving you 18 months to not pay for the washing machine. But after that, then you have to make your monthly payments plus your interest. So this is an example right here that I'm going to finance this item. So it's going to be considered a notes payable, because I can choose whether I'm going to pay within the year, or I could choose to extend out my payment and pay, more than a year. Okay. So let's go to my ledger. And let's see. So again, I just purchased an asset, right? I purchased a cash register. So once again, that's going to be under office equipment. Okay. Let me go up one because I passed it. So here's the coffee grinder. So those are your equipments. Here it is. Cash register. So once again, I'm going to go ahead and put the date here is 6/6. And piece of information that I need to place in here is that, well, I bought a cash register. Do I need to put any information about financing it? Not really, because you already bought it, right? You already went home with it. So in this case, you don't need to write any information here in regards to anything except for that you purchased it. Okay? Because all of that information is going to be more pertinent for when you place it into your subsidiary ledger or when you place it into your notes payable. So you know how much you need to pay every month or so on and so forth. All right? So for this case, I just bought a cash register, so I don't need to place it at that information in there because I'm already filling out my cash register account. So again, post reference is general journal number 2. All right? Debit's going to be for the $649.49, which makes that my beginning balance on the debit side. Okay. So then now that we have this right there, we need to go to liabilities because a notes payable is going to be a liability. All right. So here, my notes payable account's right here. And this is where you're going to indicate your information. So we bought a cash register. Okay. We financed it. Finance for 12 months. Okay. 0 APR. And then next thing you could say is, if not, after 12 months, this is where you could say you will be collecting 18% interest. Okay. So then you know when you are looking at your accounts payable, how are you going to reduce it? In this case, I'm not given my bill yet, so I don't know what my monthly bill is or what my minimum payments are. So right now, on my first bill, I should actually be receiving that I have no minimum payment due. But in this case, I want to make sure that I take advantage of that 0 APR, right? That I don't need, if I extend my payment later on in the future, I have to be subject to pay for interest. So in this case, I might go ahead and just pay the minimum payment or make my monthly payment, so then I don't have to pay for the interest. Okay, but that's definitely information you want to make a note of, that you made a 12-month finance agreement. Okay, once again, general journal number 2, and this time because it's a liability, and we're increasing our credits or increasing the debt that we owe, we are going to be crediting this account. And this account is going to be for the $649.49 because that is what I owe on my notes payable. So as I make my monthly payments, then my amount that I owe for my notes payable will slowly decrease. But if I choose to just go ahead and pay for the whole thing all in one go, then yes, I will have the opportunity to reduce my my notes receivable by a lot because I'm going to pay it off quicker, right? That way I have less chances of getting hit with that interest. Okay? All right. So there we have it for that section right there. So now that we finished my journal, now the next thing I got to do is finish up my subsidiary ledger, because now I have an account with Restaurant Supplies and I owe them money. Okay, so let's go ahead and find Restaurant Supplies in our vendor list. Okay, Restaurant Supplies should be somewhere down below in alphabetical order. So here, N. Okay. Robinson Restaurant Supplies. Here we are. Okay. So 6 once again. And this is where your notes is going to be placing all that information that we just had earlier, right? We need to put the account number in there. We need to put information such as what my terms are, right? So in this case, I'm going to go ahead and write here that I have an account number. What was it? Account number 569812. 569812, okay? And I financed cash register, okay? 12 months, 0 APR, okay? After 12 months, okay, I'm going to get charged 18% APR. Okay. Now, once again, I didn't receive my bill from from Restaurant Supplies just yet to tell me how much I need to make a payment for. So therefore, I don't have a minimum payment, or I don't have a clue until I receive my first bill from them. However, I purchased this from the store. So what was my sales receipt number that I need to make a reference for? Okay. In this case, my sales receipt number is 001487. Okay. 001487, right? That's proof that I purchased from the store. Okay. Post reference, once again, it's General Journal number 2. Okay. No terms because I didn't receive a bill, but because I'm being financed, there's no way you're going to get a term. Okay. Because you've already told them, hey, I'll pay it back to you later, and breaking it up in payments. So there's no chance that you will get a term. All right. Once again, we didn't make a prepayment because we went to the store and we paid for it. So the invoice amount here is going to be $649.49. Now, since I owed it on an account, I didn't make any payments to this yet until I received my bill. All right. So now I'm going to go ahead and enter in that formula once again. We're going to start with our invoice amount, subtract any prepayments, subtract any returns and allowances, subtract any discounts, and subtract any payments. So then in this case, if I press my enter key, I owe Restaurant Supplies $649.49. And that is true. I do owe them $649.49. Okay. So once again, you could drag that formula down because Restaurant Supplies is, we're going to keep purchasing stuff from them. So I'm going to go ahead and pull down that formula all the way down. Okay. So for that sales receipt, I agreed that I was going to make a payment. I was going to purchase a cash register for $649, but I'm putting it on an account, so I owe them money. Okay. All right. Any questions there?
No.
Okay. So let's go ahead and take a look at my scenario. Let's see. Okay. So what I'm going to do is I'm going to stop here because then that way we know exactly what date that we're going to come back to. So we're going to come back and finish the last day of here. So when we come back on Monday, we're going to take a look at finishing up day 7, which is June 7th. We're going to complete our trial balance for the very first time. And I'm also going to be uploading week 2, so then you guys have that readily available for next week to prepare, okay? So the only thing, if you are using the Excel files, you're going to continuously use them as we go through the rest of the scenario. The only thing that you need to download as far as from week 2 is just the scenario, okay? That's it. But if you are using the Word worksheets, then I'll be continuously adding more and more, okay? And all the lecture videos that I complete for this one are all going to be under the same folder. So everything that deals with Coffee Cafe week 1, it's all going to be in one folder. Okay? So you'll find the scenarios there, you'll find the Word documents there, you'll find the videos there, and you'll find the answer sheets there. Okay? So I'm making everything all in one folder, okay? And every folder that I produce is going to be another week after another week after another week, okay? So with that being said, if you guys don't have any other questions, so this weekend you guys have a journal that's due.